2 weeks ago, I did a video on SOFI and it was titled, "This stock could double within a year." Back then, the stock was trading at $15 per share. Now the stock is up 41% since I made this post. It's been an amazing rally, and many of you guys have been asking me, is it too late to buy the stock? Am I selling my position? Is SOFI overvalued? Is it undervalued? Is it a shorts covering rally that's not gonna last too long and SOFI will go back to $10 or $8 per share? And I've been getting a lot of questions around the company, so I'm gonna talk about it in this video. I don't believe it's a shorts covering rally. I believe that was a rally that was based on the fundamentals. The stock was too cheap to ignore. Palantir is up, HIMS is up, Robinhood is up. Every single growth stock was going up except SOFI, and that's why I've been talking about it for so long. It's finally going up. It's finally catching up to the remaining growth stocks in this expensive market, and I believe it's only getting started, and my price target is $58 per share. So I'm gonna show you the numbers and I'm gonna keep it short, so I really hope you enjoy it as always. Now I'm gonna do a quick introduction and then I'm gonna talk about my valuation model. But with SOFI, they have everything you need all in one app. They have SOFI Money, which is they have a charter license. They have their own bank for checking and saving accounts. They have SOFI Invest, regular broker account, SOFI credit card with 2.2% unlimited cashback, still lower than the Robinhood 3% unlimited cashback gold card, but still 2.2%, not too bad at all. Personal loans, student loans, home loans, and anything you could imagine that a regular bank has. They grew members exponentially over the last 5 years, over a 10x, from 1.8 million members to over 11 million members. And just think about it, guys. Like, if SOFI was really facing so much competition, if Robinhood taking over was as overblown as many retail investors have claimed it was, then how did SOFI 11x in growth? How did SOFI grow at a 57% CAGR and they're still adding users every single quarter? How? And this is the biggest mistake that retail investors make, is they believe it's either AMD or Nvidia, it's either Uber or Lyft, it's either SOFI or Robinhood. But those companies can really coexist, guys. Like, that's like saying Bank of America is the best bank, so let's say Wells Fargo cannot exist, it's going to zero. So Robinhood is the leader. But that does not mean SOFI cannot coexist, and it doesn't mean SOFI stock isn't going to go up, which is why SOFI has been so cheap for so long. It's still too cheap to ignore, and the market is finally realizing the potential. And by the way, I'm using Fiscal.AI to come up with a members chart, as I couldn't find any website that would show me such charts. And if you want to try it out, they give you free access if you want to use my link in the description. But for the latest updates, they have something new they haven't had before, and it allows you to invest in private companies like Anduril and other private companies, Canva and others, and Anthropic and OpenAI, through some kind of a fundraised innovation fund for a minimum of $10 a month, and that wasn't possible before. Now, I personally wouldn't really recommend it. I mean, if it was like a fund for one specific private equity kind of company, then I would say yes. But this is a fund with multiple companies, and you cannot control what the fund manager does, which company he adds to, which company he trims, and what happens after the IPO. You don't hold the physical shares. The fund keeps custody of the shares, so you don't have your free will to, let's say, sell Anduril after it goes public. So it's not the most efficient way to do it. But if you want access to private markets, which retail investors never had access to private markets, which is a game changer, and it's going to attract a lot of users. But again, I would personally not recommend it. Now, if you're buying SOFI, you're mainly betting on one event, and this is the light blue, which is the fee-based revenue, becoming 100% of total fee-based and revenue kind of income. And that was the biggest challenge I got on X from many members. And many people told me that I am dumb and I don't know how to analyze stocks because I'm valuing a bank on 25 times earnings. That's what they told me, But the truth is, SOFI right now is still a bank. But 5 years from now, SOFI will mostly not be a bank. It's going to be a tech company. So valuing it the same way we value Wells Fargo is a massive, massive mistake. And I'm going to tell you how. Now, prior to 2021, if you go on the SOFI website, you want a personal loan, SOFI would hold the loan on their balance sheet. So they're taking credit risk in case you don't pay. SOFI will have to hold the loans. They have to collect the money. SOFI is in trouble. Okay, now they don't do that anymore. You go on the SOFI website, you want a personal loan, SOFI does not hold the personal loan. They hook you with a third-party lender, like their $5 billion partnership with Blue Owl Capital. Blue Owl will give you the personal loan on the SOFI platform because SOFI was the middleman. They collect commissions on this loan and they also collect servicing fees whenever you're paying them the monthly payment on the SOFI platform. Now that would make SOFI an amazing, very efficient, high margin recurring revenue company, which would warrant a massive multiple expansion that's beyond the traditional 10 and 15 PE kind of no growth banks, which is why the growth from here is going to explode. It's still only 41% of total income. The goal is 100% of total income, which is going to be a game changer over the long term. Now, if we look at the company's valuation, it's trading at 61 times forward earnings. 61 times might scare a lot of people, but even when I was talking about it, it was like 42 times, and people told me 42 times is a lot. But we have to be forward looking with those growth stocks, and we have to look at the company's own guidance. But for us to trust the company's guidance, we have to look at their track record. And if we look at the track record of the company over the last 2 years, they beat 7 out of 8 times. They only missed 1 time on earnings per share. This is a very impressive record. In terms of revenue expectations, they beat 8 out of 8 times. This is an amazing record for a growth company like SOFI. It's pretty much unheard of. So the company and the CEO, they are well known for under-promising and over-delivering, and he just keeps raising guidance every single quarter. And it's very predictable, and it's been happening for over 2 years. Okay, now if I look at the company's own guidance, they are guiding for 2026, 55 cents to 80 cents, and then 20 to 25% annual earnings per share growth beyond 2026. Now you might believe that 55 to 80 cents is a massive jump from the current EPS of 25 cents. This is because now in 2025, they're investing a lot in research and development. They're bringing back crypto trading. They're bringing back a lot of different features. So next year, they're going to pull back on research and development, and net income is going to explode, which is why you're going to see 100 to 200% growth in earnings per share going into 2026. And the market is starting to realize that. Now, based on the CEO's track record, I believe they will likely hit 80 cents in earnings per share. I think it's going to be easy, in my opinion. Now, the PE right now is trading at 61 times forward earnings. 61 times is too high. If we take 40 PE, which is where the company has bottomed in 2025, this is a massive multiple contraction from 61 PE to 40 PE, and we time it by 40 times earnings. This is $32 per share for 2026 for next year. The current price of SOFI is around $20 per share. This is 60% on the upside, 60% over the next year. This is insane kind of upside. This is why the stock is going up. And this is why the stock is still cheap. And it's still 60% on the upside after it went up 40%. When I did the video, it was a double in a year. Now it's 60% in a year. And in my opinion, there's a very high likelihood that's going to actually happen. But over the next 5 years, the upside is much greater. If you take the 80 cents and you put it for 4 years after 2026, so 2030 price target, and you put in 25% annual earnings per share growth based on the company's own guidance, we get $1.95 in earnings per share for 2030. And if you remember, the current PE ratio is around 61 times. 61 times is a little bit high. We're going to take a 50% multiple contraction, meaning if the PE goes from 61 times to 30 times, this is conservative. I can imagine SOFI being 40, 50 PE 5 years from now. But even if we get a 50% multiple contraction and SOFI trades at 30 times earnings, it would be around $58.50 per share. The current price is around $20 per share. This is almost 200% on the upside on SOFI over the next 5 years. So for me, SOFI remains one of the best growth stocks in this market, the cheapest growth stock in the stock market. I own HIMS, I have Robinhood, and I have some SOFI, I have some shares, I have call options where if the stock gets to $32 by next year, I make 8x my money. That's how I have it set up within like a call spread where it goes up 8 times if it hits 32 by June of 2026. So it looks like it's gonna hit. So if you want to learn options, you want to learn all these kind of things and everything I do when I buy those stocks, I've been buying SOFI $13, $12, $11. So if you want to learn those things and know about them, I share everything I do in my own group. This is the link if you're interested. But thank you very much for watching. Not financial advice. I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.